going to take you through my BEAMX trade, which we took on 1 October at 9 a.m. Last year. It was a long trade going from the 8, which I stayed 4 hours in it. I eventually just made $1.85. Why is that? I will show you in this video. So basically, moving on to BEAMX, what we usually do, we draw our support, we draw our resistance, and we basically saw that while we were here at 1 October, there was a specific area that still needed to be touched. Boom. But first of all, when I clear this up, support, what we see is that there was already a threshold here that we knew, hey, wait a minute, something might happen. This should be going down. But no, instead of that, what I saw was this particular area of consolidation at the resistance line. So basically, there is a particular consolidation bulls want to hit here. So I decided to enter a long trade. I took the long trade. With this long trade, I knew at least this resistance level will be hit. So, and based on our previous video, which you might have seen, our invalidation area would have been just right below this particular level. So we'll call this the invalidation area. Basically, price had to be able to hit this area of 0.8 before I actually even will touch the trade manually. So, what happens? 0.78. Profit will be at least 0.92, which are giving us a 3.5 risk to reward ratio. 3.5. When we even take it from a macro standpoint, the risk to reward ratio will be much bigger. So we would have even have pushed it if we had taken multiple take profits. Let's say one take profit will be at the previous high, and one take profit will be at the break of this high. So what actually happened here? It was a 2-point trade. My analysis, because there was a break of resistance. We know this trade. We saw an area of liquidity built that was supposed to be hit. Next to that, what happened after this liquidity area hit? Major drawdown. That was a catastrophic event for us in the crypto world. So what did I learn here? That the analysis was right, but the execution wasn't. Basically, I just saw, okay, hey, wait a minute. I was afraid that the trade wouldn't go my way. I didn't set clear take profit levels so that will convince me to have that actual take profit strategy to convince myself. At the same time, I was really scared. I was tired, so my decision wasn't on par. Actually, the same happened to XLM this morning. When I was trading, I was scalping XLM. I saw exactly the same consolidation with XLM as happened with BEAMX. So basically, the pattern repeating itself. Unfortunately, when we take a look at what I actually did was that fact. So this was eventually the profit card. The profit card actually shows that. Unfortunately, I took a loss on this one with BEAMX, and I took a loss on XLM as well. XLM went eventually on to push through to at least 5 to 6%, with a risk to reward ratio of 278, because again, the invalidation area is below the support area that our previous support area. So that would actually be here. Actually, this would have been a really bad trade, as a risk reward ratio of 1.3. But I am a scalper, so what did I learn? Next time, try to have a entry criteria list. So what kind of trade is it? What direction? What is your entry? What is your stop loss? Put it in a row. What's the invalidation area and the confirmation to stay in? Basically, just the same as the previous trade, which we examined yesterday, which was Aster USDT. Painful lessons are often the most valuable, so we'll keep going. Uh, thank you for your attention, and I hope to see you again soon. Peace out.